Welcome to this week's market drama. We'll start with the S&P 500, which was up 1.4%. NASDAQ was up 1.7%. It was a really volatile week, as it has been in prior weeks. But the one big positive headline that was not driven by the Federal Reserve is that UBS acquired Credit Suisse over in Switzerland. Credit Suisse was it's a global bank, and it had a lot of volatility. There was concerns that it basically would go insolvent. So that was definitely a positive headline that did drive some stability to systemic worries, if you will. There's still a lot of uncertainty around the banking system. For instance, a perfect example of this, if you will, is Deutsche Bank stock plunged more than 14% intraday before it paid some of its losses later in the week. And this is just in the back of a lot of people being really kind of panicky about banks, right? If Credit Suisse was in trouble, maybe Deutsche is next, that type of approach. Deutsche's balance sheet does not look at all like Credit Suisse's, but it doesn't matter, right? There's still a lot of uncertainty, and we also see it here in regional stock banks, continued volatility. On the policy side last week, the Federal Reserve hiked 25 basis points. More importantly, they signaled that they no longer believe, and this is a quote, that ongoing rate increases will be appropriate to quell inflation. They replaced that language with a more dovish tone, and I quote, they mentioned some additional policy firming may be appropriate. Right? So they maintain its outlook of peak Fed funds rate of 5.1, but this subtle change in language should have been read as more dovish. But as it always is when it comes to the Federal Reserve, it's not only the SAC language is what's said in the press conference and what else is happening, right? It's not just, doesn't happen in a vacuum. So around this time, when the Federal Reserve was speaking, the Treasury Secretary, Janet Yellen, was also speaking. She was at doing a congressional testimony, and there's a couple of headlines that were grabbed around questions of like, hey, will you basically guarantee all deposits? And there was a quote somewhere around the vicinity of a blanket insurance of guarantees is not our main option, right? So that spooked the market of like, wait, are they not going to guarantee deposits? Are they going to guarantee deposits? And that definitely created some further downside pressure to stocks. So we're left in this world where the Federal Reserve is trying to toe the line between keeping interest rates high, if anything, raising them a little bit more to fight inflation, which is one of their dual mandates. And on the other side of their mouth saying, but don't worry, we're not going to let the banking system go under, right? We're going to put guardrails. We'll see how that strategy plays out as the weeks progress. Next week, the one highlight is we have core PCE inflation data for February. Expectations are for 4.7 year-over-year growth. As I mentioned in the past, this is a key metric that the Federal Reserve watches when it comes to measuring inflation. They feel like core PCE is a broader measure of inflation than CPI. So we'll have to keep a close eye on that one. All right. Thanks for tuning in. Look forward to next week.